So I think number one, the Fed minutes that came out last week, the market was a little shocked the Fed wasn't more dovish. They seemed very, very hawkish, and that's really where we topped out in the equity market. So we've seen that pull back now. We've two pretty big sharp down days, Friday and today. And now the question is, again, where do we go? So I think for Bitcoin itself, Bitcoin is kind of trying to figure that out as well. And in fact, we can go to the Bitcoin chart here. Let me bring that up so we can take a look. But basically, we broke down below this channel. So this was a bearish kind of channel, perfectly parallel lower line and upper line. And you can see on Friday when we had the big market sell-off, it did break. So that's a little bit of a concern. It's not the end-all be-all, though, because you're still holding above the 2017 highs. So this is going to be a big test now for Bitcoin. Does Bitcoin come down? Does it tag it and bounce? Or do we start to break lower? And again, for that, you have to look at the DXY, the dollar. I think the dollar is hugely important here. The dollar has been screaming to the upside. I do have it penciled in that we have a nice double top here, so I expect a pullback in the dollar, and that may save Bitcoin in the near term.
Hello and welcome to Wealthy Value. In today's video, Chief Market Strategist of IntheMoneyStocks.com Gareth Soloway updates about his outlook on Bitcoin, inflation, and money printing in the coming days, whether or not Bitcoin will see more upside potential before crashing once again, and what will happen if the economy of Europe and China crumbles. Make sure to stick around till the end of this video where Gareth Soloway reveals his outlook on Ethereum, Merge, and upcoming price action. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
Yeah, so I think the CPI will continue to move a little bit lower or will grind a little bit lower. I think, again, you're seeing how the producer price index side was the leading indicator for the consumer prices, right? So we saw very early on that the producers, the people that manufacture, the companies that manufacture, their inflation was starting to kind of come down a little bit. That should get passed to the consumer a little bit as well. My biggest fear, and I think we talked about this a couple weeks ago, is that I think everyone's expecting it to go to 2% or below, like the Fed says. I don't think it does that, and I think that's your big issue later in the year. So later in the year, early 2023, the market starts to realize that inflation's stuck at 4 or 5% per year. And when we get to a point, whether it's this year, the next year, the year after that, when you have a recession, we know that recessions are inevitable. How does the Fed get us out of that this time when they can't print money? And that's the scary thing. And I think that's where, whenever that is, that's where you see the bottom in Bitcoin, where Bitcoin finally starts to turn back up and say, okay, now we have a new scenario. The Fed's not bailing us out. Inflation's not coming down. Buy something like a Bitcoin, continue to accumulate gold.
A lot of traders are losing money on the falling markets, and cryptocurrency market is unpredictable, and the bear market could win over the bull market. So how can you earn profits in a bear market? Diversify your trading strategy by trading on markets and utilize long and short positions. Welcome to Margex. It is a Bitcoin-based multi-asset trading platform. You can earn profits by opening long and short positions even in a falling market. BTC and other top cryptocurrencies are available at 10x leverage. There's no know your customer, and Margex has been nominated by Finance Magnets as the most user-friendly trading platform. Margex also features a killing MP Shield feature, and that's a system that protects traders from illiquidity and price manipulation, like the flash price crashes and the liquidate short or long positions often conducted on competitor platforms. Margex also gives you the exclusive bonus to try leverage trading without any of the risk involved. You can sign up on Margex in a minute using an award-winning interface. So to do that, just sign up on Margex. Make sure to use my link in the description below. Join the wallet section. Then you can enter my promo code in the promo code section, which I'll show you how to do that. You just hit use promo code and then go ahead and enter the promo code in that section. Then you get $100 free funds to trade and test your trading skills. Every Margex user can trade BTC, Ethereum, LTC, XRP, EOS, ADA, Uni, SOL with up to 100 times leverage. The minimum deposit is only $10 and the minimum trade size is $1. Margex users can pick between cross-margin and isolated margin for each trade. Cross-margin shares the trader's available balance among all open leverage positions that use cross-margin. To go ahead and open a trade using cross margin, simply head to the order submission menu and click on the leverage method used, either using the pen or scrolling all the way to the left on the slider. As you can see, Margex trading fees are extremely competitive compared to other major crypto exchanges. The low fees are pretty amazing to behold, especially considering the MP shield that makes trading much safer than other cryptocurrency derivatives and trading exchanges. In addition, it is possible to use 10 cryptocurrencies as a deposit position. Margex offers BTC, USDT, USDC, DAI, ETH, Link, WBTC, USDP, Tron, and Polygon as available collateral. So, what do you need to do? Let me remind you how the promo code works. Sign up to Margex using my link in the description. Join the wallet section, then enter my promo code in the promo code section. And then perfect. Get $100 free funds to trade and test. Thank you very much for watching this, and I hope it was helpful to you.
I think for me, at least when it comes to Bitcoin, I think that Bitcoin still has a small chance to make one more push up. It almost seems too easy. And I'm a kind of a contrarian trader where, we've broken down the Bitcoin chart, never really had a big spike that got everyone on board on the bullish side. A lot of people were bullish, but not to the extent that usually signals a reversal in trend. So I am kind of curious if we see that. And I agree. I mean, if you look at the Bitcoin's price today, it's only down a little bit. In fact, the equity markets are down percentage-wise more than Bitcoin, which is somewhat on the rarer side, especially when the dollar is as strong as it is. So I don't know if we can look at that right now and say, oh, that's actually a strong indicator for Bitcoin, but it very well could signal maybe a little bit of upside still left in Bitcoin's tank before it finally rolls over. So I think it's important to understand, I'm not debating whether or not Bitcoin's going to go lower. I do believe it does. The question is when. And that's going to be key here. Do we get one more push up, retest 25, maybe get to 28, or is it done now and just kind of going to that 12 to 13,000 range? You're literally where we were on the dollar on June 13th or so, June 14th. And so that would be a double top. And then I like to go to my weekly chart and zoom out a little bit. And I still think that for the dollar to only have pulled back as much as it did and then retest and break out, it doesn't seem likely because these two trend lines are so powerful. So if anything, I'm looking at this as more of a double top, at least in the near term, that should push the dollar back down. Now, you might say, well, what's the catalyst for the dollar to pull back? Well, what about the jobs number coming not this Friday, I believe, but next Friday? I think that's going to be a big one because we know the jobs number is a lagging indicator, or at least a lagging indicator, right? So we know that some of the economic data is already kind of weakening. But the jobs data has been so strong that everyone's saying, oh, well, the Fed has to keep tightening because they can with the jobs data.
Right.
But if you see some weakness in that jobs data, it's all of a sudden going to put the Fed in a much different position, and that will likely weaken the dollar quite a bit. So I think the key is understanding for everyone watching that if the world crumbles, meaning that if China crumbles because their real estate market's crumbling, if Europe crumbles because of natural gas and Russia, basically what's going on is people will flood into the dollar. So my thinking is that people are over anticipating that. And my guess is, number one, we've heard that China's already cutting interest rates multiple times. They're stimulating their economy. My guess is, again, we're going to see natural gas. I have a key level on natural gas that shows it's likely going to top out. And so I think people are actually over anticipating these events. And when it comes and when it doesn't come to fruition, that's going to be also a trigger for the dollar. In fact, let me bring up the natural gas chart. I want to show you this.
You're kind of saying this might be priced in.
Yeah, I think it is. I honestly think it is. And in fact, if we look at the natural gas chart, there's this from early 20 or late 2021. Look at this channel and how every time we hit the upper line, it sells off. And look at this. I mean, this was an epic sell-off, but look at how close we are to hitting that again. In fact, that's, for me, I'm going to look to short that on natural gas. I will be pulling the trigger on a short on natural gas, obviously proper allocation in my portfolio. But that to me is a no-brainer that it should be running into resistance here. And just to show you the power of these channels, which are parallel lines that charts seem to stick in between, take a look at the US oil chart from a while back. And I want to just get rid of some of these extra lines so you guys can really zone in on this. But this is remarkable, right? So if we go to your weekly chart, actually, let's go to the monthly chart. Look at the parallel and how it marked the top on oil. If you remember, Paul, when we were at 130, everyone was calling for $150, $200 a barrel. And what did it do? It tagged the upper end, which was perfectly parallel to these lows here, and oil collapsed back down. So I use these in my trading in every day, and it is amazingly powerful to utilize it and to be able to call tops and bottoms. So, I mean, just to be fair, there's always chances of small overshoots. So is it possible we could pierce that double top for a couple days, a week? Yes. But I don't think it's going to last because, again, everything I'm seeing is showing a weakening economy. I'm noticing retailers are starting to show. We've seen a lot of retailers reporting earnings. We did see Walmart rally, but then Target fell sharply on their report. And again, we're seeing more and more weakness coming out. And I do think that that jobs number will kind of showcase that there is weakening going on. And people will start saying, okay, maybe the Fed in September hikes 25 basis points, but it's probably not going to be 50 or 75. And then the question is, by November, December, is it even, worth the Fed hiking anymore without pushing us into a steep recession? And I think this is what the Fed's going to have to deal with too, right? Is that without inflation back below 2%, they have to be so careful not to push us into recession, because what can they do? I mean, if they put us in a tailspin, they can't bail us out again with printing of money unless inflation is down to 2%, which it is absolutely not going back to for a long, long time. Yeah, so Ethereum is one of the trickier charts for me to analyze, mainly because of the curveball of the merge and how that affects price. I'm a true believer that the reason Ethereum has rallied, I mean, if you look at the rally, it was up over 100% off of the lows. My guess is a chunk of that gain was due to the excitement of the merge. My fear is that it's going to be a sell the news event. It's going to happen. Yes, it's a good thing for Ethereum, but I don't necessarily know if it's a short-term continued catalyst. So my guess is I think you could get some bounces here, but I wouldn't be surprised if you have to go at least retest 1250 down here, which would be major, major support before it has a chance to kind of withstand the selling pressure that the U.S. markets are likely to exude. So I'm in that camp where I still think there's a little bit more downside. I still think Bitcoin has further downside, and therefore, by default, probably Ethereum. The question for me is, has Ethereum put in its longer-term low already, which, again, I'm a little bit murky on.
Yeah, so I think that is the other thing, because we have a lot of people I know that swing trade, that follow our channel quite a bit. They're looking for short plays on these, and if you look at something that, like, for example, Ethereum that is moving into a merge, if you look at the price right now at 1565, it's going to be an interesting play. How would you play that out if you were in an ETH position? Would you be looking at an entry point right now in the, say, mid-15s, or wait for a little bit more dip?
Yeah, so for me, I'd have to wait. Anytime something rallies as much as the Ethereum chart has rallied, I would be too scared or too nervous to jump in at this minor of a pullback. I mean, we're basically down, 30% or so off of those highs maybe, but it's not a huge, huge correction. Usually what you'll see is after you have such a big bear market drop in Ethereum, and again, if we go back, this was trading near 5,000. It went to 875 or so before this bounce back. Usually you'll get a check back. So my line in the sand for me would be this little pivot right down here. You can see it's a two kind of pivot top right there and right there. And that would be your spot where if you flush into it around 1260, 1250, that would be where a short-term long could be initiated for a bounce, a pretty significant bounce back up.
So what are your thoughts about Ethereum merge? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.